It is Sunday, October 26th, and a major, momentous day for the United States. President Trump kicking off his Asia tour by signing multiple new trade deals, signing deal after deal, and orchestrating and overseeing a ceasefire deal between Thailand and Cambodia. Another peace deal under his belt, but most importantly, massive news with China halting the 100% tariffs that were set to kick in next week and reaching what they're calling this critical framework for a long and lasting trade relations with China. We have the details, and this is apparently real. Markets already rallying on the news. Bitcoin spiking this morning. We'll show you.
So part of what China would do with respect to the rare earths is they would require exporters anywhere in the world, starting in December, to seek approval from Beijing to sell products or components that include Chinese rare earths or were made with Chinese rare earths related equipment. Obviously gives them quite a bargaining chip in these conversations. But news coming out this morning says that there is some deferral or an understanding for hope of deferring that particular problem.
Well, I won't comment too much on the details, but I will say that our goal is to make sure that those controls that are very expansive do not go into effect. This is something that would affect not only the United States, it would also affect the rest of the world. It would gum up trade. It would give China control over technology transactions. It's completely unacceptable.
President Trump getting busy this morning, arriving at the ASEAN summit in Southeast Asia, signing a landmark agreement with Cambodia. This deal providing Americans with unprecedented levels of market access inside Cambodia. This is a reciprocal trade deal now signed, legally binding, and providing American businesses, exporters from America, access to all of Cambodia's market. No more trade restrictions like we've had forever. Americans can now sell product unimpeded, export to Cambodia tariff-free. In this deal, Cambodia's eliminated tariffs on 100% of U.S. products. The U.S., meanwhile, will maintain a 19% reciprocal tariff rate for imports from Cambodia. So once again, Americans can now sell to Cambodia tariff-free, while Cambodians pay 19% tariffs to sell into America, with the exception of industrial and agricultural goods. And to sweeten the deal, Trump requiring this to be pursuant to a new peace deal between Cambodia and their neighbor Thailand, who've had this years-long border dispute. Trump signing this deal and tying it into this newly signed ceasefire agreement, making doing business with the U.S. contingent on peace between your two countries.
I won't forget that day because it was one of the first wars that I got involved in, and I love doing it. It's like, I shouldn't say it's a hobby because it's so much more serious than a hobby, but it's something that I'm good at, and it's something I love to do. The United Nations should be doing this, but they don't do it. You know, they don't do it. They turned off my teleprompter when I made a speech. I had to make a speech without a teleprompter. They're good at that. The escalator wasn't working too well. It came to a complete halt.
Then just an hour after signing that landmark agreement, Trump signing a new rare earth minerals pact with Malaysia to counter China, a separate minerals deal with Vietnam, and establishing a trading framework with Thailand. Then a Vietnam deal, which includes preferential access for U.S. goods and agriculture. Trump closing all of these deals by agreeing to exemptions from his 19% and 20% reciprocal tariffs that both countries are currently paying us. On top of this, Trump also meeting with Brazil's president and, most importantly, reaching a new and final trading framework with China. All in a day's work. Treasury Secretary Scott Bessent saying after 2 days of negotiations, China was ready to deal. Watch.
We asked the secretary whether or not the president's threat to impose a 155% tariff on China effective November 1st was still on the table.
Margaret, I think we had a very good 2-day meeting. I would believe that so it would be an extra 100% from where we are now. And I believe that that is effectively off the table. I'm not going to get ahead of the two leaders who will be meeting in Korea on Thursday, but I can tell you we had a very good 2 days. So I would expect that the threat of the 100% has gone away, as has the threat of the immediate imposition of the Chinese initiating a worldwide export control regime.
That export control on rare earths, which is used in all sorts of electronics and automobiles, that'll be lifted?
Well, it was never imposed. So they threatened to impose it in December, and President Trump, to give me and the trade team leverage, decided that it would be a good idea for him to threaten 100% additional tariff, and it did give us a great deal of leverage. President Trump's very good at creating leverage for us. This is the fifth meeting that we've had with the Chinese. My Chinese counterpart is the Vice Premier, Ho Feng. So we had a very good 2 days. We discussed a wide variety of issues, from the rare earth magnets to trade, to substantial purchases of American agricultural products, to the Chinese helping us in this fentanyl crisis that we have in the U.S.
Markets already rallying on the news. Bitcoin and Ethereum spiking early today. China's vice premier and top negotiator telling reporters that they've reached a consensus with the U.S. on many pressing issues, including fentanyl cooperation. This is important. We'll explain why in a minute. An extension of the current tariff truce and the U.S. Section 301 ship levy, adding that discussions were, quote, in-depth and candid. Now, both men, Scott Bessent and China's vice premier, playing a bit coy about this, signaling a lot of progress and a solid framework, but saying the deals need to now move to internal review and final approval. But what we're hearing is the deal is done, that it will be agreed to and possibly signed later this week when Trump and Xi Jinping meet in person on Thursday. China realizing that they've overplayed their hand. That's what just happened. China, look, without a doubt, has a very valuable hard asset to leverage. We saw them do this in the past few weeks. Rare earth processing capacity. They control the rare earth market, but look, that is a choice of every other country to allow that to happen. The U.S. was leading in rare earth 40 years ago. We allowed China to dominate rare earth refining because it's a job that we didn't want. No other country wanted to do that job. It's a very dirty job, a very dirty process, but now, after Trump's trade war, seeing what China just did, how China was trying to weaponize rare earth, announcing export controls for rare earth minerals, rare earth refining, the discussion around this has changed completely, folks. There is now broad consensus in the international community that refining rare earth can no longer just happen in China. The CCP realizing this, that they overplayed their hand big time by using rare earth as negotiating leverage. They've risked their one primary tactical advantage and realized it's too much of a gamble. The decision was now made in China. Cut a deal. We cannot risk that hand, that happening, that all of a sudden all these countries realize that this is too much of a geostrategic risk and they have to start refining rare earth. Listen to Professor Wang from MIT explain what just happened here. Watch.
I think this is a fundamental difference between hard assets and soft assets, right? So the U.S. advantage in advantage, the value of the dollar, the credibility of the financial system, Federal Reserve, these are substantial advantages. I'm not questioning that, but these are sort of soft assets. And, gold is hard, but it's really mainly used not for its own value. It's really used as a storage of value. So in essence, it's more like a currency, more like an asset. Vis-a-vis hard assets, right? Hard assets take time to establish. But I think I would argue that overplaying your hand is not going to be a wise move down the road. I think if there was any debate before this move, whether or not other countries should invest in processing capacity, processing capability, that debate is finished. there's now consensus that we should do that, right? So, I mean, in the long run, that is going to reduce the Chinese bargaining power, Chinese leverage, and also it's not good. It's not really good for Chinese economy as well, because they have established this formidable capacity and they're making a lot of money out of it. It's a very important part of their export production. So sometimes you really have to think hard about, getting some short-term tactical advantage, which requires you to calibrate your response, and doing something really, really drastic. You may win in the short run, but you may lose in the long run.
So love him or hate him, President Trump is moving at lightning pace. 2025, folks, is Trump's year. All of this being possible, all of these trade deals being possible because of tariffs, all of these countries dropping their tariffs and trade barriers, all these trade deals signed due to his reciprocal tariff policy, something that the experts said would destroy the economy, cause widespread inflation, yet inflation's falling. Eggs are half off, energy cheaper than it's been in a decade, wages are rising, and Walmart's now bringing back 2019 prices. Yes, pre-pandemic pricing for Thanksgiving.
And let's talk about Thanksgiving first. Food prices are up, especially turkey. So what are you doing to help customers keep the cost down?
We will have the best prices on this basket we've had since the program started. We're down about 25% from last year, down about $14 for the basket, which puts us in a position where this basket is just under $4 a person when serving 10 people. Mm-hmm. So we have a great basket that has a mix of our great brands, like Butterball turkeys. Our turkey prices, George, are all the way back to what they were in 2019 at 97 cents a pound. So
and look, all of these trade deals happening with gold hitting north of $4,000 an ounce, a record price that's accompanied by record silver prices of over $50 an ounce. The gold mining sector has been appreciating in 2025. All right, that wraps up the news portion of this video. Now let me tell you about our sponsor, a company that Van Eck, Roofer, Goldman Sachs, Sprott, all have a position in this New York Stock Exchange American-listed company. Today's sponsor, GoldMining Inc., ticker symbol GLDG, a gold exploration company with over 10 different projects in the Americas, but it also owns large positions of publicly listed gold companies, giving exposure to additional catalysts and leverage to the gold prices. At the same time, GoldMining Inc.'s market cap, roughly around $295 million as of October 21st, 2025, yet its portfolio of equity holdings, including cash positions, are worth about $214 million USD alone, based on October 21st closing prices and cash balances at August 31st, 2025. That's before giving any value whatsoever to its portfolio of exploration stage gold-focused projects across the Americas and any additional potential value and optionality from its uranium project located in one of the world's highest grade districts, the Athabasca Basin in Canada. On top of all of that, the company has no debt. No debt. Based on its most recent MD&A as of August 31st of this year and closing prices of underlying securities as of October 21st, 2025, look at this. All of these stock values based on the closing price on October 21st, 2025. GoldMining Inc. has positions in these four companies, two of which nearly tripled in 2025 so far. And above that, GoldMining Inc. owns one of the largest gold and gold copper resource stage mineral portfolios in the Americas. We're talking over 10 projects located in pro-mining jurisdictions in Canada, the U.S., Brazil, Colombia, and Peru, with an estimated 12.4 million ounces of estimated gold equivalent in the measured and indicated category, and an additional 9.1 million ounces of estimated gold equivalent in the inferred category. GoldMining Inc. has announced plans to advance four key projects. Highlight is the São Jorge project in Brazil. The company commenced its largest ever exploration program in May 2025. This is a project with approximately 1 gram per ton open pit resource with regional growth potential on a 46,000 hectare land package. That's approximately 115,000 acres, targeting resource resource growth is important given the industry-wide challenge of reserve replacement as these major producers deplete reserves rapidly. The gold mining portfolio includes increasingly scarce large-scale gold and gold copper projects in mining-friendly jurisdictions. If these projects are progressed successfully, they are just what the major operators will need to replenish reserves that have been mined through production. These are projects in safe jurisdictions with infrastructure advantages and a management team with deep experience in building value over time. Gold mining's leadership, including mining veterans, including former Goldcorp CEO David Garofalo and serial entrepreneur Amir Adani, serve as co-chairman. Insiders own over 10 million shares, showing strong alignment with shareholders. So if you want exposure to gold through a company with exposure to gold's price, a pipeline of development projects, and interesting institutional and insider backing, GoldMining Inc., in my opinion, is a research opportunity. As always, though, make sure you review GoldMining's public filings for important info regarding it and its projects, including its most recent annual information form and technical reports that are referenced in them. These are all available at sadarplus.ca. All right, that wraps up this episode. Like, subscribe. We'll see you next time.